Hey, this is Danielle. Welcome to today's episode of Your Daily Five. Today, I'm going to be talking about the run into earnings phenomenon that occurs particularly in the Nasdaq and high beta tech stocks when we're in a bullish market environment. So, now that the VIX is pretty low, again, we're at the lowest levels that we've seen in the VIX going all the way back to the beginning of 2020. And now that we've been in a very nice bullish trend since the beginning of this year, end of last year, I am now looking for the run into earnings setup again. So, what that means is that, when you look at the NASDAQ or look at the QQQs, and then you look at when earnings occurs, you're typically going to see a boost in price in the NASDAQ going into those earnings reports. Now, in this case, tech earnings are going to be starting next week, starting with Tesla and Netflix, and then we're going to get into Meta, Amazon, Microsoft, Alphabet, and Apple, and some semiconductor stocks as well in the week after next and the week after that. So when you look at the QQQs, one of the things that I want to point out is going back into April. So April, is a time frame where we also have this run into earnings phenomenon. You can see the way that the market consolidated in March, ended up trading higher going into April, right around tech earnings. And we consolidated for a bit, had another squeeze, and took off again post earnings. So at this point in time, we're now continuing along with this uptrend, and those moves into earnings are historically going to continue going into those reports. And if we can get some good reports, then ideally, continue even further. So let's go ahead and look at some individual chart patterns. Now, Tesla is one of my favorites for this pattern. It doesn't fit it perfectly this quarter just because this quarter we did have a situation where last quarter Tesla ended up gapping down after earnings. The majority of the time, the pattern is going to work better when you have a positive move post earnings the previous quarter. Now with Tesla, it's a little bit unique because even though it did gap down after earnings last quarter, historically over time, if you go back, the last 12 quarters or so, you are going to see Tesla having a nice little bid going into earnings. Now, of course, have to take into account there was a bear market here. So try to go back and compare a moment in time that was similar to the moment in time we're seeing right now. Obviously, we've been in a pretty good uptrend in this stock since the beginning of the year. So comparing it to the moment in time where the market was tanking isn't as helpful. So you want to go back and look at when we were also in a bullish trend and compare those two environments. So when you're looking at Tesla, Tesla has earnings coming up next week. So I just wanted to demonstrate with this one that this is one that ended up, popping right before earnings. Last week, we had some news coming out where Tesla deliveries were better than expected. We saw this big gap up, and this, of course, occurs just right before earnings. So the idea here is what other stocks can I identify where we can still participate in a move because Tesla, in this case, the move has kind of already happened. So let's look at a couple others. Meta is one that I would like to bring up because Meta has a combination of my favorite factors. So if you look at the last two quarters, when this company reported earnings, you can see that it experienced a breakaway gap. Anytime you have a gap up on earnings with a continuation move like that, it's just incredibly bullish because it says that investors were not just happy with the report, but they're also looking forward to the future. And even after this big gap up, they still wanted to buy the shares and they didn't just buy the shares, 1 day, 2 days, 3 days after the report. The buying was continuing throughout the course of the entire quarter. And so when you have that situation and not just one quarter, but 2 quarters in a row, where you have this breakaway gap, it's pretty substantial. Now, if you go back and you say, okay, well, what about 3 quarters? In that case, you had this major gap lower. Well, even though this was a huge gap lower, what's crazy about it is that is even still bullish because that gap recovered And after the gap recovered, I mean, it just continued trading higher. So with this stock, I like this up into a price point of 325. The reason why I'm targeting that price point is because that is where the gap was when everything started going wrong with this stock. So you can see right now, we're up at 309, right up in here, 325, 328 is where I think that the stock is returning to. So I am long this name. And especially today with the breakout volume and momentum that we're seeing in this name, you can see that the volume has been increasing as this stock has continued to go higher. That's a pretty bullish sign as well. So to conclude with Meta, I do like it to the upside, 325, 328 for that gap fill. The next one I would like to discuss is going to be Microsoft. So Microsoft also had a breakaway gap last quarter. Microsoft has also recently retested that previous all-time high. What was interesting was that this week, these big tech names, they pulled back, fell right into support when there was some news about the fact that the Nasdaq is going to be rebalanced. So that was actually, I think, a great buying opportunity because we've pulled back directly into the 34 EMA. We had some wicks on the bottom of the candle. We also have a daily squeeze and we have earnings coming up. Again, the breakaway cap plus earnings, usually pretty bullish. Now, with Microsoft and the squeeze, what this means is that it's consolidating, it's gaining momentum, and it's, has that pressurized energy that's going to break out. Now, it might not end up breaking out before earnings, and it might actually end up breaking out post earnings. If that is the case, then that would align with the statistics that I use as well, because not only do I like to trade the move going into earnings, but Microsoft, 9 times out of 10 will keep rallying post earnings in the 8-day time frame after the report. So I usually, in the options market, I like to trade a bullish move going into earnings. I get out of those options. I put on a different options trade for the earnings report. And then I also like to trade a third trade, which is the post earnings move. The reason for this is just because the way you utilize options are going to be different based off of the implied volatility. And so that's why it's usually 3 separate trades. I also do hold the shares, and Microsoft is one of my top portfolio picks in my long-term stock portfolio. So like this one, definitely up into 350. And then after that, onwards and upwards to 365. Another one that I wanted to point out here is going to be AMD. AMD has been a little bit in the shadows, because there's been a lot of attention on Nvidia. But AMD also has the whole, AI chip factor combo partnership with Microsoft. And, more than anything, it has a very nice bullish trend. You have a nice pattern of higher highs and higher lows. You have a pullback directly into support. You have earnings coming up. We do have a squeeze on this one on the lower time frame. If you go down to the 195-minute chart, that is where you're going to be able to see a squeeze on AMD. So we have a squeeze setting up here, which really just means that you're consolidating and ready to break out. So I like this one back up into this zone. It's going to be about 125, then 130. And, I have to go over Nvidia as well, because even though, AMD is kind of like the ignored little brother in this case, Nvidia has been incredibly strong. So when you look at Nvidia has that 4-hour squeeze as well on that 195-minute chart. And, it just continues breaking higher. I know it sounds crazy to keep trading it, but it's a relative strength winner. I love trading relative strength. I'm not buying shares right here, but I'm continuing to trade it to the upside in the options market. This one also has that breakaway gap, so again, very bullish. I was targeting 450. You can see it already met that. But after that, I'm looking for 485 and then 500. Thank you very much for joining me for this episode of Your Daily Five. If you would like to learn more, you can follow me on Twitter at Trader Danielle, or you can follow me on YouTube at Trader Danielle as well. If you have any other questions, let me know. I hope you have a great rest of your day, and I hope you enjoy earnings season.